Hey, what's up, everybody? Hopefully, everybody's having a great start of the day today. Markets are open. It's Tuesday, and right now, of course, the market's open, as you can see while I'm making this video. So, one of the important things I want to talk about today is shorting the top. Okay, with the current market condition and the way that everything is looking, the catalyst in the market that's very negative and affecting a lot of the movements, affecting the volatility in general. It's causing a lot of big movements, and with the volatility, basically increases the average true range of a stock, meaning that if your stock moves, let's just say $2 in a day, it'll most likely move $4 up to $6. That's what volatility is. Volatility is an increase of fear and tons of sellers coming into the markets because of the catalyst that we are currently experiencing. There's a lot of stuff that has to do with the news, a lot of stuff that inflation, interest rate hikes. I mean, it's a whole lot of negativity. So what better thing to do than to follow the trend? Okay, maybe I should have made this video a long time ago, but it's the perfect time right now. And I am not bullish whatsoever in the market as of right now. Not speaking like as in just today, but just in general, because of what this trend is showing us, and not just the trend, but also in general across the board. And with the catalyst in play, a lot of extra confirmations and tools that we can use, that basically everything is pointing down. So I want to give you guys a little more information and a few tips here and there on how to enter your positions for the short side. If you guys don't know how to buy the dip yet, like all it is in general, you're just kind of flipping your charts upside down and you're going for the put side. Okay, so like right now, I got an alert for NQ that it's dropping below, but we're gonna talk about shorting at supply. All right. So first and foremost, make sure that you do have the supply levels, all right, the resistance, the strong ones. And some of the strong ones are the ones that have touched multiple times. Like, for example, look at ES, all right? We kind of bounced right here as a support. But then look what happened right here. All right, so PayPal is also dropping. I'm getting tons of alerts. Look what happened here. Okay, this technically right here shows that it consolidated for about 3 days. And on the third day, it dropped heavy with the confirmation the next day. And then also confirming into today, gapped all the way down. And now we have a green open, which is normal. Okay, I think a lot of traders out there will see that, hey, there's a huge green candle, I think we're going to do calls. No, it's not that right now, because the trend is your friend. And when the trend is your friend on the red market, those green candles are the ones that you should be getting into puts for. Okay, so we do understand the direction. Okay, so here's the market and we're already trending down. So you just draw this nice little trend line to the downside and understand where you're coming from. Okay, here's your drop, here's your base, here's your retest, right, from this 44, what is this, 44.50, right? We're just going to round it off. And it rejected the 44.50 and it dropped all the way down to this 42.50, that small wick. So basically, you're targeting the next demand, right? So your demand is actually way down here. Now, there's not a lot of candle structure bodies here. There's more wicks than anything. And it drove it all the way to this 43.50, right? So you're basically grabbing the major resistance points and understanding that, hey, that green candle is a pullback for a bearish position. All right, so now that we have that, all right, there goes ES dropping a little bit more. So anybody who's in puts right now, congratulations. I know a lot of people out there right now are trading puts, and it's pretty amazing. I actually traded puts too, and no call positions whatsoever. All right, so let's go. We already understand this from the 4 hour. Now you break it down just a bit more, and let's go look where the next support was, right? So we bounced right here for that retest, and look what's happening here again. Okay, So the same area is getting rejected. So it's a perfect opportunity for anybody to enter a put play, right? So I'm going to leave that there. So now what I'm going to do is I'm going to drop down to the smaller time frame and show you exactly where this got rejected. You see? Perfect area, 4360, while everybody thought that this was going to be a rally-based rally. The bears are still in control. So with the bears still in control, it's going to drive it down. So here's your entry position. Your stop loss is right above. There's no reason to not enter, and there's no reason to bag hold calls, because now you're trading the position and you're trading your call position to the top. But now the bears are still in control in the market, right? So let me just give you another example on something that rejected today, right? So here's Amazon. And we're just using the 15-minute time frame just to show you the previous day levels and how to gauge in with those pre-market levels, right? So here you have a top. Here's your pre-market. Look where we rejected exactly, okay? I know a lot of people will trade like the bottom of this right here, and then other traders are waiting for, you know, this to break. But look how easy it is right now to grab the top and to get into a bearish position right away, and you can target the pre-market low. So it's not a big a big risk, because everything is so bearish. So all you're doing is you're grabbing the previous day high, the rejection, and you're grabbing it to short it all the way down to the bottom. And then now right here, you're already trailing your position. So you should already be super green on this. Anyone who enters below this pre-market is already missing out on the whole move. So they're only catching a slight percentage, right? Let me show you another one that rejected. And just to show you guys where the value is at and how to short those tops. Okay. So this one had a nice base, as you can see. All right, so it had a nice little demand that it created the previous trading day, which was Friday. And then it came back down, gapped down to this 190. There's tons of buyers down here. Basically normal. If it drops that, you know, you expect a call position, but it retested that same level, right? It never broke above, created a nice little doji right here, and then it just started trending down, and now it's breaking below this pre-market. So technically the target for something like this that drops this low, Facebook can technically, with volatility, strong volatility, drop down to this 190. So just giving you the example here on Facebook. Let me give you another example. Right. So here we have Apple. Again, what gave it away was this huge wick. We never broke above. We never stayed above that pre-market. And then it automatic instant rejection. While other traders, like I said, most traders will wait till we, you know, break down below, but your entry is right here. Okay. So entering those short positions just to short the top, right? Let me give you another one. Again, I'm just giving you guys some of the examples so you can remember like what it is to short the top and how you can enter the position. All right, so look at this. Here's your rejection. We never broke above any of these pre-market levels. Like, look how tight this pre-market level is right here. And then once we broke this 386, it just continued to drop on down. And I have a target of 376, right? So I think Netflix still has room to keep on dropping. And this is the one ticker that I shorted today for a nice 30% play right at the open, and then right again at the next second position that I took. But I do see Netflix going down to 360 in the next few trading days, just because of the relative strength, relative weakness. And with the market being strong, right at the open, Netflix couldn't break any higher. So I knew that the rejection was going to be there. The fact that it traded in such a range, it gave it more of a confirmation to drop down. And now it's dropping inside this previous demand. If you guys remember, at one point, there was some like big investor who bought tons of Netflix shares here. I don't care who he is. That guy's not paying my bills. I just know that this chart is showing a lot of rejection. It accumulated out here for such a long time. It couldn't break above. We're in a bearish market. So technically, short the top. It's okay to grab one of those positions and be a little biased in this case. Not to say that if you go red on your position, bag hold it. Don't do that. You got to make sure you manage it and you stay green on your position. There's a difference here. But just know that the market in general right now, everything is bearish and the sentiment is pointing down, and there's a lot more puts being played. So therefore, I'm giving you some great examples as to how you can benefit from shorting the tops. Okay, let me show you another one. Right, everybody likes to trade Tesla. All right, so where do you enter a short position here? You would say, right? Look at this top. All right, there's your top right there. We instantly reject it. Remember, it's a candle body structures. So a lot of candle body structures are right there. And that is the perfect area that it rejected. And it's been red ever since. And again, most traders out there have the entry point right here. And then other ones would have it here. By the time you get to these levels, you've already missed a big move. So if your entry is right here, your stop loss becomes right above. And this goes for any position that you are trying to short the top. Your entry is the top. Let it play out a few candles and then let it reject that heavy. By the time you're in your position, you're already trailing it. By the time it gets here, this is your new trail stop. And if it still keeps on going, this becomes your new trail stop. And this is where everybody else starts to come into the position while you're already like, I'm just a round off, I'm gonna say 70%. This guy's only green like 10, 15%. And he's so excited about a 30% while you're already at 80 and 90, getting close to 100% gains on your position. Why? Because you followed the sentiment and you decided to short it at the top versus trying to buy the dip in a bull market. See, all you have to do is turn this around and this would be technically a dip. Now, let me show you a cool trick on how I can explain that, right? If you have Thinkorswim platform, check this out. You hit the negative sign right here, right on top. You hit Tesla and look how it looks now. It looks like a bullish chart. So now when you look at it the opposite direction, this right here becomes a demand, right? In this case, turn it around is a short position, and now you're playing the bull run here, or you're playing the bearish side, right? May sound a little confusing, but like I said, if you turn your chart upside down and you're only comfortable playing calls, look at it, play it like this. All you got to do is play that put position, right? So hopefully that gave you a little peace of mind right there, right? So you go back to Tesla and imagine if you would have bought that dip, right? Technically you're playing puts right now, right? Your take profit is way over here already, and you're already green on your position. So just giving you guys a quick rundown on, you know, how to short tops, guys. Right now, this market is very bearish, as you can see with ES. ES is still trending down. /NQ is still trending down. RTY is still breaking down. I mean, look at the consolidation, right? And it's still showing lots of signs of rejection. So no matter what you guys see today, in the next few weeks, as long as the catalyst is here, as long as the catalyst is negative in general, I think these charts are still going to be trending down no matter what. So any huge green candles that end up at a resistance point, don't be afraid to short. Now that will change if we go bullish. So remember, this video is not just to say, hey, a year from now, you know, short the green candles in a bull market. Heck no, by no means. Understand what you're up against, understand what's in front of you, and follow the trend. If tomorrow this thing breaks above and we start trending up to like 4,600 on ES, I am for sure going bullish. I am switching with the market automatically. I am not thinking twice. Okay, I may get stopped out on my first put position, but automatically I'll switch gears and let's go bullish. That's okay. But as of right now, everything is still bearish. Everything is still pointing down. The aggressiveness is still a little crazy. The volatility is still high. As you guys can see, the VIX is trading at almost 30. Well, 29.49 right now. It's almost at 30. So the volatility in general is just very high, and everything is still a put play. So not saying to go again and bad gold, puts, you still got to manage your risk, guys, and still understand how to enter and exit those positions, right? Remember, if you enter right above, your stop loss is right above, and then your take profit is trail it all the way down. Okay, follow the trend, let the trend be your friend. Don't go against it. Don't think that because you see one huge green candle, everything's going to be bullish. Okay, there's a lot of tickers that are at low value right now, and it's amazing. I think the value buy in general is great. It's like the only thing that's holding a lot of things back is the catalyst and the volatility in general. So hopefully this gives you guys a little more insight on how to short tops, guys. Be aware that we are in a bearish market, and that hasn't changed just yet. So be wise, manage your risk, don't oversize your positions, and let's stay green. And I'll see you guys on the next video.